Treasury Secretary Janet Yellen has just announced that the U.S. federal government is going to run out of money right around June 1st. So early June, but not before June 1st. And that really brings a lot of clarity to where our debt ceiling battle is going to end up. And so we saw yesterday the markets, financial markets, started to get a little crazy, and let's just say it's going to get a lot more interesting today. You're going to want to watch this video with the Federal Reserve meeting happening today and the announcement on interest rate changes, all that jazz, and we're going to talk about what it means for you and yours. This video is brought to you by Genesis Gold. If you don't like having your money in stocks that have a tendency to crash and bonds that can crash, you want to have it in something a little more stable like gold, silver, or platinum in a vault. This is for your retirement funds. If you don't have retirement funds, you want to just go out there and buy those things and make sure you have those in your physical possession. But if your money is locked up in retirement funds, IRAs, 401ks, you probably want to talk to Jonathan and his team about whether you want to move over to precious metals. You can find them down in the description down below. All right, so Janet Yellen, who was former Federal Reserve president before Jerome Powell, she is now, in politics, and you just wait, give her another year or two, and she's going to be heading some bank for even more money, or she's going to be a lobbyist. But that's just kind of how that whole system works. But so she, in the letter to Congress, basically said, this is the best estimate, early June, we're going to run out of money. And so that kind of hit the markets right as they opened. It happened before the markets opened Tuesday, and things just went straight down. We got a number of other things happening right now. We, of course, have banks imploding here and there, and we had the Federal Reserve meeting. They will announce at 2 p.m. Eastern Standard today, probably to raise interest rates another 0.25%. And so we've had 3 major U.S. banks implode in the last 2 months. So obviously everything is under control, and shouldn't be worried at all. We're going to just keep hiking interest rates until something breaks. Of course, 3 major banks going bust in the last 2 months. You would maybe think that that might be something breaking, but they're going to keep doing it until the stock market absolutely crashes. So make sure you're positioned for that. Make sure you know where your money is invested if you are in the markets and everything like that, because when they say that the stock market takes the escalator up, but takes the elevator down. And that's a situation where you don't want to be caught off guard. A lot of folks on this channel have retirement funds, everything like that, have been caught off guard. I've talked to a number of you through emails and such that have really taken a hit over the last 12 months in the stock market, and it's been a wild ride. So what will happen today? Jerome Powell's going to come out and he's going to raise 0.25 interest rate up. That's almost certain. But what happens after that? Is he going to basically kind of leave the door open to another rate hike later in the future in case data comes in really, really nasty? And it looks like it's going to be coming in nasty with inflation and all that. So he might want to do that, but that's going to be taken as a threat to the market, and the market's not going to like that at all. If he kind of makes it really sound like, yeah, okay, so we're basically done unless something happens, then we might have to hike a little bit. But we're gonna hold here for a while and see how it goes. We're gonna see how it all those interest rate hikes work through the system. See how many more banks implode and get bought up by J.P. Morgan Chase. The rich get richer, and all the banks get more consolidated so that they can be more easily controlled by the federal government and the Federal Reserve's new digital currency. So that's kind of where we are with all that kind of stuff. Interest rates going up are good for people who want to get some interest, but the problem is inflation is higher than interest rates. So if you park your money in a bank, you're paying them the difference between the inflation rate and the interest rate. So if inflation's at 15% and your interest rate is at 5%, good luck if you can find it at 5%, you're basically losing 10% of your money as value every year. And we all know that interest rate and the inflation rate is somewhere around 15%. If you go to the grocery store, you've seen that. Everything is up in price. I was just looking at, what was I looking at? And it was just like, it was double in price for what it was a year ago. It's just like, this is just ridiculous, you know? And yet they'll look at us and be like, oh yeah, so the inflation rate's around 6%. I'm sorry, friend, but how does stuff double in cost and then you number crunchers come out with 6%? Like, how does that even work? Like, nothing in the grocery store has gone up 6% in the past year. Everything has gone up at least 15, 20, 30%. At least. And most of the stuff has gone up a good bit more than that. It's just crazy out there, folks, and the government just lying to cover it up, because if you start to panic, if everyone starts to panic, then it just gets worse. But here's the thing, is that it's going to continue to get worse until people panic, and then it's going to get a lot worse. It's inevitable. You can't hide it. It's not going to get better. You can't just keep printing money and expect inflation to go down. And I think the stock market's starting to figure that out. But more importantly, what the stock market's really kind of just staring right in the eyeballs of and refusing to admit is the commercial real estate explosion. The commercial real estate bust is basically happening in real time right now. This is office buildings. This is commercial buildings for businesses and everything like that. Nobody's going to the office anymore. And if they're going to the office, they're not going downtown anymore for office because they don't want to get stabbed on the way to work. They don't want to keep having their cars' windows smashed in. So they're not going downtown anymore, and yet that is where the most valuable real estate is. All these office buildings in Manhattan and Chicago and Los Angeles and San Francisco, and yet a lot of these buildings are vacant. They say in a number of these cities like Chicago, 50% of the office buildings downtown are vacant. So if you own an office building and you can't rent it out to anybody, how in the world are you going to keep making those interest payments to the bank? Or are you just going to default on that? And how's the bank going to handle that? And that's where we are. All these banks have all these assets on their books that supposedly has this value, but in fact, it really has this value. And they're refusing to mark it down. And when they realize that they need to mark it down, their bank goes kablooey. 3 major banks in the last 2 months. Does that sound under control to you? It isn't. It won't be. Things are getting ugly out there, folks. Position yourselves to protect yourselves and survive the coming storm. Stock up food, absolutely. But make sure your financial house is in order as well, because things are getting bad out there. All right, folks, if you haven't already signed up for the newsletter, you can sign up for it right here. You just click on that button right there. There is going to be a free giveaway, a prepper checklist that we're going to be finalizing here shortly, and that will be going out to everyone who is on the newsletter list and anyone who signs up for the newsletter at that point. But that's something that hasn't been seen elsewhere. It's going to have some interesting quirks and useful tools embedded into it that you haven't seen on any other channel. There's another video up here if you want to check that out. I'll see you over there, or I'll see you guys later. Steve Poplar of the Poplar Report, out.